Hello and welcome back to another edition of 4 Minutes, proudly brought to you by Bendigo Wealth. This week calls for more transparency on super fund boards. For more details, make sure you pick up tomorrow's issue of Money Management. And now to your top story of the week. Andrew Tanardis reported on calls by the financial planning industry for a fresh approach to professional indemnity insurance. FPA representatives said the premiums for smaller financial planning practices were unreasonably high, but Amy Pozoglu pointed to the reasons for the uplift in the pricing regime, adding it applied to every player in the market.
Well, we saw that with the recent collapses of Westpoint and Basis Capital and also the GFC, that demonstrated that there's a lot of volatility in the area of financial planners, and as a result there's been premium increases across the board regardless of whether they're a small dealer, mid-size or even the larger dealer groups. What we do find though is that the smaller dealer groups are actually having a lot of difficulty bearing those costs. And for us at Jewel, it's a matter of selecting our client as opposed to imposing pricing increases.
Also in this week's Money Management, Rice Warner has clarified its $11 cost of opt-in finding in response to criticism from segments of the financial planning industry. The finding was based on the fact that opt-in would only apply to new clients due to the grandfathering provisions, with the researcher claiming planners would be able to incorporate it as part of the regular client management. The AFA chief Richard Clippen has called on the government to delay the implementation of FOFA beyond 1st of July next year, pointing to the proposed regime as undermining the robust independent sector. Meanwhile, the opposition spokesman for financial services, Matthias Cormann, has accused the government of planning to raid the Future Fund to help its prospects at the next election. Cormann quoted the head of Department of Finance, David Tune, who said there was an expected sale of assets from the Future Fund. First State Super is also likely to come under regulatory scrutiny following reports connecting the fund to Health Services Union. However, First State Super Chief Executive Michael Dwyer issued a statement in which he denied inappropriate arrangements with the Health Services Union. Synchron Director Don Trapnell said the term churning defames financial advisors, as the word is being used to describe a legitimate practice. Parramatta District Court has given the former CFO of Westpoint, Graham Rundle, a suspended 18-month prison sentence as he enters into a good behaviour bond. Competition regulator ACCC is currently examining Commonwealth Bank's proposed acquisition of Count Financial, with interested parties given until the 26th of September to comment. Meanwhile, the CBA has appointed Annabelle Spring as its new group executive for wealth management, and Kirk Pittman will replace Robert McCarby as head of Coin Financial Software. And finally, data from researcher DEXA found new individual lump sum risk business grew by 3.5% in the 12 months to June 2011 to just over $1 billion. AMP AXA is the new leader in terms of market share, followed by MLC. For all the details on those stories and more, see tomorrow's issue of Money Management. Thank you for joining us, and I'll see you again next week.